Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, December 1st, 2009. Well, the first day of the last trading month of the year is underway today in December, and here we go, folks. The market with a nice solid gain to get the month off on the right foot, as the Dow is up about 121 points, the Nasdaq is up 29 points, and the S&P 500 up 12 and a half. So a nice gain here across the board, basically 1.1%, 1.2%, which again is not a huge gain, but it's a solid gain. That's a good way to start December overall in what you would think. Now, there's some interesting things I'm going to bring to your attention today that I find absolutely fascinating in regards to what this market is doing. And a couple people in the chat room that we run here brought it to my attention as well, and I did think it was very interesting. If you look back on the charts, folks, the charts going back as much as 3 weeks from yesterday, you can see that we've been in a cycle pattern of 3 days above the Great Wall of China, 2 days below. Well, technically speaking, so we had Monday 3 weeks ago above with the breakout. We gapped above. We made a high. We never confirmed it Tuesday and Wednesday. Thursday we fell. Friday we fell as well. 2 days below. So again, Monday gaps above. Tuesday, Wednesday inside candles, staying above the Great Wall, still above the Great Wall. Thursday, Friday fell back below. Well, let's talk last week. Next up, you could talk last Monday, big up day. So a week ago from yesterday, big up day. Tuesday, Wednesday, same thing. Inside days, no confirmation, but above the Great Wall of China. Thursday was closed. Friday, down we go below. Guess what, guys? That's what you're seeing. Guess what happened Monday? Yesterday, still below. We did not get back above the Great Wall of China. So there's your 2 days. Friday and Monday, below the Great Wall of China. Today, what happens? We gap above. Do you guys see what's going on here? This pattern recognition. 2 days below, 3 days above. 2 days below, 3 days above. Now, who knows if it's going to continue to hold, but I do think it's a fascinating point to bring to your attention about how this market is cycling. So here we are, folks, today. A nice update again, kind of in pair with the 2 days below, 3 days above type theory. And again, this would be day one above. Now, what we're going to see here is where today closes, and then obviously what we're watching for tomorrow is whether or not we do get confirmation in regards to this market. So keep an eye on this over the next couple days. We want to see where today closes. Are we above the Great Wall? If we're above the Great Wall, what do we do in regards to continuing to confirm this market to the upside or downside? Do we fall back below the Great Wall? Right now, we're trading near the highs, so if we closed up here, it would not be tough to confirm it tomorrow. We'll have to watch. If you confirm it, the next levels will be dictated, but that's only for premium subscribers, folks. And if you don't understand confirmation, it's the biggest discovery since Elliott Wave, Gann, you name it, Fibonacci. It's the biggest discovery that we've been utilizing here for years and in the money. We finally released it to the public based on what we've been able to tell. And again, that's released in the research center and the chat room throughout the day. We talk about it, we teach it, and you need to understand it, folks. It's very, very intricate, but very, once you get it, it is easy to understand, and it will tell you whether the market's going higher or lower, or whether or not you can expect an up day or a down day. Now, the markets again today, here we are. We had a little bit of an up move right above this blue trend line. You can see one bar consolidation. It fell back down. We went right to this support level. These lines were on the charts for everyone to see today in the chat room, as well as last night in the research center video, which again is about 45 minutes in length every day. And again, you can see here, as you came back down right to support, that's your buying opportunity. The market floats right back up. Why is the market going up and down? Simply put, the dollar. This is going to be the story of the year, folks. When history looks back on 2009, they're going to not necessarily look back at the credit crisis. That was more of 2008. They're going to more look at the dollar. The dollar has been the driving force of this market day in and day out for this whole entire year. The market, again, if you look at the dollar chart, and I'm going to show you guys this, we're going to go to the dollar chart, the UUP, going to the weekly chart. See this high right here? Look at this high right here. When was this made? It was made in the first week of March. The high was put in the dollar first week of March. What do we know about the first week of March 2009? The low in the market was put in. All right, now see that. So since then, this is what the dollar's done, folks. That is what the dollar has done. What has the market done? It's done this. I'm going to go to the dollar, the SPY chart. But again, just note this pattern right here. Up, this is what you expect the market to do. It's going inverse to the dollar. See how inverse? Dollar drops hard. This is the dollar weekly chart. Now let's go to the spiders. Look at that. There it is, folks. That's what the markets have done. So you can see it's directly inverse to the dollar. As the dollar falls, market goes up. So I will tell you right now, the story of the year when history looks back at 2009 will be the dollar. It will be the dollar and the impact, and obviously the ridiculousness of most of the policies that are going on, which is dropping the dollar to prop the markets up. Ultimately, that's going to blow up and all the Federal Reserve and the Treasury and the government's face. But long story short, at least for now, it's not blowing up yet. Obviously, it will blow up, but not yet. That's down the line a few years out. So in any case, keep that in mind. Let's go back to the intraday chart of the SPY and continue to focus on this market. All right. Again, what are you looking for, folks? Resistance right now is right here at the highs of the day. You can see we just touched it. If you get above that, you have a major level of resistance right here at 111.50. 111.50 will be a very big level of resistance on the intraday chart. If you come back down here at the blue line, you'll have minor support, just minor support. If you get below that, you're going to go down to the lows of the day, which right now is the 20 moving average as well. That's 110.75. Again, 110.75 was called out as support on this market, and that's exactly what we got. There were some good little odds and ends trades today, a couple being this one right here at this Pierce. See this Pierce of the 200 also happened to be this little gap area right here, which happens to be the high pivot. Notice this from this high pivot, which also, if you extend it, connects to these high pivots over here. This level was called out in the chat room as a good buy on ExxonMobil today. You're looking at the Exxon intraday 10-minute. Look at the move on Exxon. Right off our buy call right there. Beautiful little call on the long side, understanding that it might pierce the 200, go right down to this gap, little area in the top pivot from the last 2 days right here. Yesterday, double top, and the day before the highs. Sure enough, right there it goes. Look at the move up as well. Goldman Sachs, the weird thing about today, folks, is the financials are very, very weak again. This is commodity driven. When the dollar drops, all that you need is the dollar to drop and the markets will go up. It doesn't matter what financials do because ultimately it's commodity stocks that are going to be rallying, like ExxonMobil, Chevron, you name it, those are going to be going. So you can see clearly that Goldman started out strong and got very weak. In fact, you have a little bit of a bearish pattern here in Goldman Sachs. Now, the interesting thing about this, folks, is that if this does break down, it doesn't necessarily mean the markets are going to come in. Now, they may, but the key, again, is all about the dollar, folks. Look at the dollar today. Look at this. Dollar again angled down. Recently, it started to make a little bit of a move up here, get a little bit of a bounce, and you can see that it's a direct inverse to what this market is doing on the SPY intraday. The market's overall pushing up beautifully right here, and now coming in as that market comes in as the dollar pushes back up a little bit. But you're getting a very minor move down in the markets based off the dollar pushing up pretty nicely, and the reason for that, folks, is just light volume. There's no volume here now as we enter the 12 o'clock time frame, and that will continue to be extremely, extremely light here, and not expected to get much momentum to the downside unless the dollar really takes off to the upside, which I don't think it's going to happen. So ultimately, I'm looking at a positive day on Wall Street today based on the 3-2 theory. Now, 3-2 theory is a new theory we're going to talk about. Again, it's kind of an interesting thing. I'll cover it more in depth tonight in the Research Center videos, but the 3-2 theory is intact here, and it is holding up very nicely. And again, recognition of this type of stuff is very important because it could have told you yesterday to expect an update today, and that's exactly what you got. All right, folks, so watch that again. Watch your key levels. Join the Research Center. Join the chat room. You want to be involved there. You want to be learning. You want to get the guidance that we give out, and you want to learn confirmation along with other things, folks. Again, the greatest discovery since Elliott Wave, Fibonacci, Gann, you name it, it's the greatest discovery since then. Take care. Have a wonderful day.